Good morning, everyone, and welcome to Weekly Profit Talk. As you might imagine, we do this every single week on Wednesday, 8:30 a.m. here in Rocky Mountain region. That is 7:30 on the West Coast, 10:30 on the East Coast. Good morning. Welcome, everyone. This week's topic is the numbers your tax return didn't show you. Um, your tax return is a rear view mirror. It basically tells you what has happened, but and there is a temptation for private practice physicians to treat the tax return like it's the final word on their financial health, as this says here, but that is not the case. The final word belongs to a handful of numbers you should be watching every single month. Um, they're what we call KPIs, and that is just an acronym for key performance indicators. Um, Numbers that have nothing to do with taxes and everything to do with whether your practice is thriving or quietly hemorrhaging. So let's take a look. First one, and you may or may not be tracking these already. If you're new to practice, hopefully this is of some use to many of you. And we'll share the four that I'm aware of. The first one is a biggie. It's revenue per encounter. So basically, if you take the amount of money that's generated in a month's time and divide that by the number of encounters, you're going to have a RPE number. And it's not how many patients that you see, but the value that each visit produces, as we say here. If this number drops, you're either undercoding or your payer mix is shifting in the wrong direction. So that's a good thing to keep an eye on. Second thing is overhead percentage. That's kind of an antithesis to profit margin. Similar, but not the same. Total operating expenses divided by your total revenue. That basically gives you an overhead number. Now, a profit and loss statement is simply three parts. You've got a big number at the top for the revenue that you take in, all your patient encounters and everything. And then cost of goods sold, which should include costs of labor, and that is going to be your staffing. It might, and in most cases, anybody that has more than a couple, three people, staffing is probably going to be your biggest expense, or right up there with rent. So, after that, you've got a number called gross profit. Below that, you have all the other selling and administrative expenses of running your practice. There's your rents that I was talking about, advertising, consumables, supplies, utilities, phone, meals, advertising. I might have said advertising once. Okay, so all of these things are considered overhead. If your percentage is around 60%, you're probably doing decently. Okay. Remember, it's not how much you make in the end, but how much you get to keep. And a lot of that has to do with taxes too, which is a subject for another week. But if you find that your overhead percentage is creeping over 70%, it might be time to take a look at, as I've said here, maybe looking at ways to stem the tide of infection. So next, days in AR or accounts receivable. Um, Everybody knows in the medical profession that claims receivables are one of your crosses to bear. You may have uh, not only one, but even two secondary or three tertiary insurances that a claim has to travel through before you finally get all the money. Hopefully, you have yourself set up to where you know what the patient responsibility or COINS coins. It's basically co-insurance. It's the patient's responsibility portion. That's not co-pays. Co-pays should always be collected at the time of service. And ideally, you should be able to calculate your co-insurance and get that as well. So um, if you're running around 53 days, as I've said here, 50 to 60, you're doing decently considering. And of course, if you're dealing with tertiaries, it could be longer. But if you're above 60, your billing process might have a leak. If you're above 90, it has several. If you get up to 120, you're in the realm of non-collectible. So long AR cycles are the reason that a strong practice feels cash strapped. And cash is the lifeblood of your business. Makes sense, right? Collection rate. Speaking of which, if your collection rate is below 95%, you're leaving money out there. It might be old balances nobody's following up on, other kinds of write-offs that should have been appealed somehow. Um, you don't want to give away the store and do a lot of charity care, certainly. That's kind of hard to feed yourself and your family, as well as, your dedicated staff. So, collection rate is a KPI certainly that you should be keeping a good eye on. So, again, the four KPIs are revenue per encounter, overhead percentage, days in AR, and collection rate. Why these numbers matter more than your tax return? Again, I've said before, the tax return is a backward-looking document and it's prepared for the IRS. Now, it does give you a measure of metrics and it gives you an idea of exactly how well you've done to a certain extent. But the four KPIs that we just went over are forward-looking instruments, and they're designed for you to basically tell you exactly how well you're doing now and how well you can expect to do in the near future. And ideal scenario is if you've got help and are able to cash forecast 91 days out is 13 weeks. That's my magic number. If you're able to do that, then you're basically showing up for the game suited up and ready to see the whole court as well as the entire scoreboard. So these KPIs will give you data to make decisions based on reality, not on last year. Your tax return tells you where you've been. Your four KPIs tell you where you're going. So I hope that you found this helpful. We were talking just now about cash forecasting. If you're interested in that level of service for your practice, where you're not only getting to see your financial statements on a monthly basis, again, that's a history lesson, though it's more recent past. Each month, you should be looking at your holy trinity of financial statements, which is your profit loss, balance sheet, statement of cash flows. And I think we covered this a couple weeks ago. Um, but having an idea of where your cash is going and where you'd like it to flow to in the next 90 days is almost guaranteed to give you a good warm feeling about how your practice is doing in the near future as well as how it's doing now. So if you're interested in having some help with that sort of thing, we are coming to you live through one of three different media. We're not only on LinkedIn and YouTube, but Facebook as well. And all three of those have a comments capability. So if you'd like to talk some more, please pop something like help or more info into the comments wherever you're viewing this, either live or in replay. We'll get back to you within 24 business hours and we'll tell you how you can have a free conversation with me directly. And let's see if it resonates to work together. So I'd love to save you tens of thousands of dollars on your taxes. And I'm not kidding. If you're in a practice that's making over $100,000 after overheads, you can easily save that much. I'd love to show you how. So, if that sounds good, reach out and let's talk. So, until next week, have an amazing rest of your day. And if you have a chance today, do something randomly kind for a stranger. So, until next week, so long, and we will see you in the next weekly Profit Talk.